All right, today we're diving into the latest earnings report from Worthington Enterprises, and this one's a real head-scratcher. They just announced these incredible results, but then their stock immediately took a nosedive. It's the kind of puzzle you see on Wall Street all the time, and we're going to get to the bottom of it.
So this is the core of the mystery we're unraveling. Right after announcing a huge beat on their earnings, Worthington's stock dropped over 6%. On the surface, that makes absolutely no sense. So what did the market see that wasn't obvious in those great headline numbers? Let's break it all down.
To really understand why the market reacted the way it did, we first have to appreciate just how good these results actually were. For Worthington, these numbers weren't just good, they were seriously impressive. I mean, look at this. Worthington just delivered a clean sweep. Wall Street was expecting revenue to be around $349 million. Worthington came in and posted nearly $379 million. They also blew past the expectations for earnings per share. These aren't just little wins, folks. This is a solid, undeniable beat on both the top and bottom lines. And get this, it wasn't just about beating this one quarter's expectations. Their revenue shot up a massive 24.4% compared to the same time last year. Pulling off that kind of growth, especially when the CEO himself called the economic conditions mixed, well, that's a really big deal. So the big question is, where's all this growth coming from, right? Well, it's not just one thing. When you listen to the earnings call, it becomes clear there are two very different but equally powerful engines driving this whole business forward. It's such a wild mix. On one hand, you've got this super high-tech industrial demand that's directly tied to the AI boom. Worthington is making these specialized liquid cooling tanks for data centers. And then on the other hand, you have something you might see at a kid's birthday party, their consumer brand Balloon Time, which is just seeing explosive growth in stores. It's this fascinating mix of heavy-duty B2B tech and everyday B2C fun. The CEO, Joe Hayek, he put a huge spotlight right on this data center opportunity. See, as AI gets more and more powerful, the chips get hotter, and the need for this kind of advanced liquid cooling is just skyrocketing. In fact, on the call, they mentioned that this part of their business is expected to triple this year alone. That's not just growth, that's a total game changer for that product line. Then you flip over to the consumer side. Their Balloon Time helium tank kits, they're now in 55,000 stores. And just to put that into perspective for you, that's a 64% jump in their retail footprint in a single year. They're just gobbling up market share right now. Now, this kind of success in two very different areas doesn't just happen by accident. The company credits their performance to a very specific playbook they have, something they called the Worthington Business System, or WBS. And this WBS system really comes down to three main ideas. First up, you have innovation. That's things like developing those new data center cooling tanks. Second is transformation. That's all about using new tools like AI to make their own operations smarter and more efficient. And third is M&A, mergers and acquisitions, like when they recently bought LSI, a building components company, to get bigger in that market. It's a clear, repeatable strategy for growth. Okay, so let's recap. We've got a company with a clear strategy and is performing incredibly well, which brings us right back to that original puzzle. If everything is going so great, why on earth did the stock drop? Well, the answer isn't in what they just did, but in the potential risks that are out on the horizon. You see, the market is always looking forward, not backward. It's always trying to price in what's coming next. So while those third-quarter results were fantastic, investors were clearly getting a little spooked by the potential for some turbulence up ahead. And to their credit, the company didn't hide from these challenges on the call. So here are the main culprits making investors a little nervous. The company flagged potential issues from tariffs and volatile commodity prices. They pointed to geopolitical disruptions, things like shipping and fuel costs tied to conflicts in the Middle East. And on top of that, some of their joint ventures, like Clerc-Dietrich, which is in the construction industry, are seeing some softness in their markets. Investors have to weigh all those future risks against the great past performance. So when you pull back, the big picture is this fascinating duality. Internally, Worthington is executing its game plan almost perfectly. They're riding the AI wave, they're expanding their consumer brands, but externally, they're facing the same macro and geopolitical headwinds as everybody else. That strong quarter proved they're resilient, but it couldn't just magically erase the uncertainty of what's to come in the global economy. And that leaves us with the final multi-million-dollar question, doesn't it? Worthington is delivering these incredible results and is perfectly positioned to benefit from the AI boom. But the market is weighing all of that against some very real, very serious external pressures. is the company's internal strength and strategy enough to win out in the end? Well, that's the story we'll all be watching next quarter.